Hi everyone, I am Dr. Nagadeepa. Today's lecture will be provided by myself regarding capital gain. This capital gain is one of the important part of income tax law because this is people are now investing in many assets like shares, building, land, and mutual funds, so on. So people are investing not only to get regular income, sometimes they want the capital appreciation also. Why? If they get more value, they will transfer and they will get some income or profit from that. So regarding that transfer, if you are getting any gain, that will come under the category of capital gain. So today we are going to see what is capital gain, what all are the different types of capital gain are available under Income Tax Act of our India. Now, I'm going to show you first of all what is capital gain. So what is capital gain? Very simple. Any profit arises from the transfer of capital asset is called as capital gain. So this gain may be loss or profit. Both comes under the category of capital gain. So under the Income Tax Act, these gains are taxable in the previous year in which the transfer took place. So for example, if you are transferring your asset in July 2024 means then it is taxable in the previous year 24-25. Now, which will be considered as a capital gain? That means there are few conditions are there to consider that transaction as capital gain. So what is that? Number one, first of all, in the transaction, there should be a capital asset. That means you have to, or an individual or company, a person should transfer a asset. Next condition is that transfer should be done by the assessee. So assessee should be there in the transaction. Third one is the transfer must occur during the previous year. And the last one, because of the transfer, there should be a profit or gain. So if these four conditions fulfills, then only the transaction will be considered as a capital gain. Next is we are moving to what are the different types of capital gain. Majorly, the capital gain is divided into two categories. One is long-term capital gain, another one is short-term capital gain. What is long-term capital gain? This arises from the transfer of long-term capital assets. If there is a gain arises from the short-term capital asset, then it is called as short-term capital gain. So here you can see two different words are important, that is long-term capital asset, short-term capital asset. So how to determine whether that asset is long-term or short-term? This is basically derived from the condition that is holding period. Holding period means how many months or years you are holding that particular asset. That is called as like a holding period. That means difference between the purchase date and the selling date. This period is called as holding days or months. So based on this, we are going to divide the asset into short-term capital asset or long-term capital asset. According to Income Tax Act, the transfer of the asset, if it is occurs before 23 July 2024, then the assets are classified into three categories. And based on that, you're going to decide whether it is a short term or long term. The first category is listed securities, equity oriented mutual funds, units of UTI, then mutual funds, zero coupon bonds, all will be coming under one category. This category, if you are holding less than or equal to 12 months, then it will be considered as a short-term capital asset. Suppose your assets are unlisted shares, land or building or both, then you should at least hold less than or equal to 24 months, then it is called as short-term capital asset. The third category is other than these two things. That means the unlisted securities other than share, like unlisted debentures or anything if you are having, or other assets, for example, jewelry. So these assets are considered short-term capital asset if you are holding less than or equal to 36 months. Next, we are moving to long-term capital asset. The categories are same, that is listed securities. But if it is above 12 months you are holding, then it will be considered as a long-term capital asset. And the second category, if you are holding above 24 months, then it is considered as a long-term capital asset. And the last category, if you are holding above 36 months, then it will be considered as a long-term capital asset. So these conditions are if the asset is transferred before 23/7/2024. Suppose you are transferring after 23/7/2024, then the category will be, instead of 3, it will become 2 category. That means first one is same, listed securities other than units, equity oriented mutual funds, UTI, zero coupon bonds, which is less than or equal to 12 months. If you are holding, then it will be considered as a short-term capital asset. And remaining all others will be falling in the other category. If you are holding less than or equal to 24 months, will be considered as a short-term capital asset. Same way, in the long-term capital asset also, the transfer happens after 23/7/2024. The category of assets will become again 2 only. That is the first category. If you are holding above 12 months, it is long-term capital asset. The second category, that is others, if you are holding above 24 months, it will be considered as a long-term capital asset. So this is the way you are going to identify whether that asset is long-term or short-term. Why do you want to know this long-term or short-term means? Based on this only, we are going to calculate the capital gain. Because short-term capital gain will be calculated different way and long-term capital gain will be calculated different ways. For example, how to calculate the short-term capital gain? There is a steps to be followed. Based on the steps, we are going to calculate the capital gain under short-term. So first of all, what you have to do? First, you have to decide whether that asset is short-term or long-term based on the conditions. Once you decided that is a short-term capital asset and it is transferred during our previous year, then we are going to calculate the short-term capital gain using the following steps. What is the first step? First of all, you're going to consider or you're going to know what is the sale consideration of the particular asset. That means it may be received or receivable during the previous year. You have to take the whole sale consideration. From this, you're going to deduct the expenses. What are the expenses? The expenses related to such transfer. For example, commission. You would have been paid commission to sell the particular asset, or you would have been given some brokerage. Sometimes machinery will be there. That machinery you have to dismantle it. Then only you have to sell it. Then that expenses, any expenses related to such transfer will be considered as expenses. So this expenses should be deducted from the sale consideration. Once you deducted the sale consideration and the expenses, then you will be getting the answer that is called as net sale consideration. So from the net sale consideration, now you're going to deduct the acquisition cost or cost of acquisition, cost of purchase, we can say that. So you would have been purchased that particular asset in particular time. What is the amount you have incurred to purchase? That amount is called as cost of acquisition. And that should be deducted from the sale consideration. Next is there is any improvement you have done for that particular asset that you have to deduct. For example, if you have purchased the asset that is building, which was having only ground floor. After purchase, you would have been constructed one more floor. So that may be considered as a cost of improvement. Or you would have been renovated the particular asset, that is the building, then that is called as cost of improvement. So that amount you have to minus. So after that, whatever net amount is coming, that is called as short-term capital gain, taxable under Income Tax Act. So this is the way you're going to calculate the short-term capital gain. I hope you understood very clearly. Okay. Thank you so much. So we will have some problems or practical calculations in the future classes. I hope you understood very clearly. We'll see you in the next class.